to the show to talk some Zoom video, because guys, there's few names that are maybe as representative of kind of the stay-at-home trade as a name like Zoom Video, and the chart really it tells us just this. When you look at the name, how incredible it performed throughout the really the heart of the pandemic, and how it's performed as things have started to reopen. So Jenny, when you're looking at this one, while it might not be quite as exciting of a name as it was maybe 6 months to 9 months ago, it is still one that I'm sure is on many watch lists and one that is on many kind of traders' spotlights here as we go into the earnings release.
Absolutely, and I kind of think Zoom has become an integral part of so many of our lives. It allowed, children to go to school when schools were closed. It allowed us to still work. I mean, Zoom is the whole reason I'm able to talk to you all right now, which is kind of cool. And so it was a clear beneficiary of the pandemic, like you mentioned, but now everyone's sort of wondering how they can possibly maintain these levels of growth they've seen over the last year. It's sort of a victim right now of its own success. Shares have fallen about 56% off of their all-time highs of about $5.88 a share over the last few months, just really as the economy starts reopening and as we got positive vaccination news. I mean, they've just, like you mentioned, they've sort of rode the waves really of the last year as we've gotten all of these different headlines out. Now they have first quarter earnings today. Analysts are expecting earnings of about 97 cents a share on revenue of about 905 million. Now, what's interesting about Zoom is their full year profits soared more than 700% in 2020, just due to this growth acceleration we're seeing as a result of the pandemic. And like I mentioned, now investors are very concerned how they can possibly duplicate this success. Now, from a quarter-over-quarter basis is something I think we need to focus on with this name, because of course, when looking at year-ago levels, the growth metrics are just astronomical. I mean, for example, in the fourth quarter, which they reported back in March, revenue soared nearly 370%, and the number of customers contributing to more than 100,000 in the trailing 12 months surged over 150% year over year. But more important than that, I think they actually rose from the prior quarter. Now, customers with more than 10 employees, which is a really key metric of their growth, rose 470% year over year. So these are some of these numbers where I just don't think we can compare on a year over year basis, because it's going to be difficult for this company to convince skeptics they can sort of pivot from this pandemic-induced boom we saw over the last year and remain valuable in the new normal. However, they are doing so many different things as far as growth initiatives. They reportedly are looking to diversify their revenue stream by entering this contact center space. They're also focused on adding different calendar features and different email platforms to compete most closely with Microsoft Teams. Another thing is they actually announced last week launching an event platform, which will be for virtual and hybrid events. Now, a lot of the buzz in social media today ahead of this first quarter report is just, a lot of these high growth tech names that have sort of taken a beating in the first half of this year, and really what will make them, get back to some of these levels, get back near all-time highs. So that brings me to our first tweet of the day, which says, how do we know growth has a change in trend? Key leaders will move back above their 200-day moving average. Names such as Square, Twilio, Pinterest, Okta, ServiceNow, Fiverr, Tesla, Zoom, and Peloton. We don't need them all to do it, but a group of them would be telling. Others just above: Etsy, Roku, CrowdStrike, Shopify, and Sea Limited. So I thought this was interesting because this sort of highlighted what we've deemed as sort of the pandemic beneficiaries. I mean, all of these names: Square, Peloton, Zoom, Okta, just some of the names we've talked about over the course of the last year. Now, Zoom specifically is still about $60 below their 200-day moving average. So they will have to make a pretty sizable move to get there. But I think it's a really interesting, key level to maybe possibly take a look at. And our next tweet focuses on this degree of stickiness we talk about a lot with some of these pandemic names. So our next tweet says, the digital transformation due to COVID was permanent. Example 3, Zoom in January of 2020, the consensus analyst estimate for 2021 revenue was $866 million. 2020 happened. The consensus estimate for 2021 revenue is now $2.6 billion. In 1 year, estimates are up 200%. So again, year-over-year comparisons, I think, will be difficult for this company going forward. I mean, how do you expect to continue growing 400, 200, some of these crazy levels of growth, from a year-over-year perspective? However, However, I do believe that people will continue to use Zoom, point blank. I think people will continue to use it at work, not at work. I mean, we are entering right now the hybrid work environment where most people at least, will have this sort of combination of working from home while also working from an office. Or my dad was a person that was once traveling 200 plus days a year, and he's able to now use Zoom to actually eliminate some of that travel and Zoom with people all over the world. So I think that is something that will keep itself, relative in all of our lives. But yes, I don't believe from year ago levels, Zoom is possibly able to stand a chance with those growth levels, Kevin.
Jenny, you cannot put, Zoom as, well, I have to sell the stock or the stock won't go up because my Zoom happy hours have gone the way of the dodo bird, right? That's not a reason to be bearish on this name, because those people that did the Zoom happy hours, they weren't paying customers anyway. The corporate customers are who's actually paying the bills for Zoom right now. And that part of the world, like you just mentioned, international travel, when is that coming back? Could be years, right? Even if some business travel comes back, which I think some will, there's still going to be a hybrid model of that. But all those things together, happy hours, taken out of the scenario, you still have to figure out if Zoom is if the growth has slowed and how much has it slowed and will it affect the stock? Right now, the chart looks pretty brutal on Zoom, and the 200-day moving average looks like it's several zip codes away from where we are right now. And so it's hard to put a positive spin on this other than the company's still growing, but when will it catch up to the valuation is what everyone's worrying. And right now, it doesn't seem like it has as of yet, Jenny.
Kevin, you know what's incredible is how much our expectations change. This is a name that's up 373% since the beginning of 2020, and we're saying that it's a horrible looking chart. And the thing is, I hear what you're saying. It's off several $100s from its highs. It's struggled on a year-to-date basis. It's down like 10%. I get it. It's just incredible that we have such high, lofty expectations for some of these names. But Jenny, great setup here for us. We got to leave it there. Thanks for joining us, TD Ameritrade Network contributor Jenny Horn. As we say goodbye to Jenny, I want to welcome in Landon Swan, the co-founder of LikeFolio.com. And Landon, this is a very, very interesting name because while I might be kind of hard-pressed to believe that there's people out there that haven't used Zoom or one of its kind of comparable products, whether that be a Cisco WebEx, Google Hangouts, Microsoft Teams, over the last year, apparently there's maybe still people who are adopting this technology, and I'm impressed by that as time goes on, but more probably interested in how many people are talking about not using it anymore.
Right. Yeah, you're absolutely right. It is, I think when it comes to the important adopters, they're already in. It's businesses. That's going to be the one that drives the top line revenue. It's not, like Kevin says, happy hour with just, personal use. I don't think that is going to be a strong use case for this company going forward. It's all about the business use case. My personal experience is that if it's maybe 5 or 6 people or less, Zoom can work. If it's more than that, you got to be in person. I think conferences are really important to business overall, and I just don't see it happening virtually. It's not nearly as effective. I know Zoom's trying to get that going, but I think that's a huge uphill battle. And when you look at, you talked about adoption. So if you think about what LikeFolio tracks as purchase intent, that's people signing up for Zoom and joining. Of course, there was a massive spike when the pandemic started. Zoom was in the right place at the right time. The stock was around $100 pre-pandemic, like right before the middle of March when everything started shutting down of 2020. So now it's, what is it, 325, something like that. So over triple since then, even though it was higher, of course. But purchase intent had a huge spike at that point and has really just been slowly trailing off. And I believe it's just continuing lower right now. So purchase intent's down, cancellations are up. We've got people talking about cancellations near all-time highs. There was a peak right after New Year's as people sort of culled all of their expenses that they're not using on a monthly basis. But I do think for a business perspective, it is very important to have that capacity. I don't think it's going to replace all business travel or all business meetings, but I do think it's very useful. Here you can see that purchase intent chart that I was talking about, the green line, people talking about joining Zoom, huge spike, had a little resurgence in the fall of 2020, but has since then fallen off. And you can say, you know, post-pandemic all-time lows right now. So nobody's really signing up for Zoom anymore. It's very, very low, and the cancellations are up. I think it's probably a little bit too rich at this price point, but they do have a first mover advantage and a UI advantage. I mean, it is very easy to use Zoom to sign up for it. So they have some things going for them. Here you can see the cancellation mentions just continuing up and to the right, a little bit of a pullback, but still people are really talking about how they're canceling their Zoom. But again, I think this is personal use, as Kevin talked about, and that's not what's going to drive revenues. It's going to be the companies with lots of employees that adopt this as part of their normal everyday practices, especially for those small meetings. So, you know, that's kind of an overview of where Zoom's at right now. One of the things that's kind of interesting to me, though, is just looking at their expected move from a trader's perspective. I think it's around 7.5%, which seems really low. And when I looked up the last 3 moves, they're all 13 or more percent on that move. I think it was 13%, 14, and 17%. So the last 3 moves are big. Usually I'm a premium seller, but at these levels, I'm considering buying some puts potentially on this trade, because I think that expectations are likely to be missed, and I think the market maker move is a little low.
Yeah, Landon, this is a tricky name, because you know what I looked at? I just hit up a chart, and I hit up a 10-year chart of a company that I think companies can still be really good companies. Companies can still have a great future. Companies can still have everything going for them. However, the valuation of the stock is too high, right? And that's what my fear is. No matter what Zoom video reports, or how their gradual or something more than gradual growth of this company is moving along, it's still the valuation is what it may trade off of and what they may take out of. You know, GoPro is a great company that had a great product, and the stock hit $98. It's now 10. It's now 11, right? These are the names that have had high flying early when they were unbelievably popular, and couldn't help but come down off those levels. And Zoom, though a fabulous company with a bright future, there's a big difference between what I just said and the price of the stock and the valuation of the company and its growth. So I think that you know, this company, what they've done is revolutionary. I just don't know if that equates to a higher stock price from here. I have no idea. So I think what you're talking about, Landon, in a way, playing for movement versus no movement in either direction might be the way to play this. I'm not sure, and I don't know if I'm going to do that, but I think that is a reasonable assumption for Zoom Video, even though prices are a lot of premium in some of these names. So I don't think you were the first one to think of that idea, Landon.
I agree for sure. Yeah, it's just that on a company like Zoom, 7.5% market maker move just seems low to me. And so I was happy when I looked up to see that the last 3 moves were much larger than that. But you know, of course, there's something going on there that the traders know about that I don't, most likely. But if you look at some of the trends overall that help Zoom, obviously working from home was huge. That's down 9% quarter over quarter. So there is a movement away from working from home. Digital work conferences down 11% quarter over quarter, down 64% year over year, and in-person conferences are up 22% quarter over quarter. So there is a shift of returning back to normal. So just as this pandemic completely helped this company, 15, 16 months ago, I think the end of the pandemic is, which I like to think we're at now. I think that is going to hurt this company, and they've got to make a bid and make the sales pitch to investors that, hey, it wasn't just the pandemic, that we're not just a flash in the pan, we've got staying power. I think that's a tough sell to investors because there's going to be a lot of competition. You know, you talked about GoPro. I think if you look at the quality of the iPhone camera, and if you could somehow chart that next to a GoPro chart, I think you'd see a correlation there. That's, I believe, what killed GoPro. And there may be a new competitor coming in to the video conferencing space, or it could be one that's already out there. You know, Teams, or if you maybe
Sure.
Slack gets something like that going. There's a lot of potential competition or substitutions for Zoom. Even iPhone could come up with one, something like that, if they made FaceTime business. I don't know, just throwing things out there. There's a lot of scary potential announcements that could come in the future. So Zoom is scary for me. I think that at this price, it's probably a little too high, and I'll be playing the bearish side, probably with some puts. Which I don't normally do, but I think that the expected move is just priced a little low right now.
Good stuff, Landon. We got to leave it there. Thanks as always for joining us. We look forward to talking to you again soon. Landon Swan, the co-founder of LikeFolio.com. Kev,